Welcome to weekly view on markets. This week, markets continued their bull run. The market was powered by Mr. Powell's statement after Fed meeting in US. Nifty gave a further rally of 2.32% during this week. Nifty had already gone up by more than 3% last week. So Nifty crossed 21,000 during this week and closed at 21,456. The rally was broad based and all sectors, including mid cap and small cap stocks, also participated. Advanced tax collections have come in this week. Advanced tax collections are up by around 19% during comparing to the last year. So market is very happy with this advanced tax growth, and market has reacted to this. The technical indicators of the markets remain strong, that we will see on the charts. Markets are trading at a premium valuation in expectations of the growth in the economy and in the corporate governance. The growth in corporate earnings is further confirmed by the advanced tax deposits by companies. Markets are poised to go up, but they are trading at premium valuation, and any disappointment in corporate earnings will result in a sharp drawdown in the market. The factor of safety is very low at this point of time. Let us look at performance of indices during this week. Nifty has closed at 21,456, has gone up by 487 points, that's 2.32%. Bank Nifty has closed at 48,143, has gone up by 881 points, that is up by 1.87%. Mid cap index has closed at 45,586, has gone up by 1,186 points, that is 2.67%. Small cap index has closed at 14,885, has gone up by 481 points, that is up by 3.35%. India VIX is stable at around 13.12. I had advised in my previous week that Bank Nifty has taken off crucial resistance levels and headed towards 50,000 levels. So we have seen this Bank Nifty going up to around 48,000, crossing 48,000 during this week. Momentum in Bank Nifty will take Bank Nifty to 50,000 levels in the coming week. Now let us look at sectoral performances. Information technology, after staying stagnant for several months, has suddenly come in with force, and lot of buying was seen. It has gone up by 7.16% last week. PSU banks have recorded 5.17%. PSU stocks, all other PSU sector stocks have gone up by 4.06%. Commodities have gone up by 3.29%. Realty has gone up by 3.84%. Infrastructure, energy sector, manufacturing, NBFCs, auto, oil and gas, all sectors have seen good buying this week and gone up by 1 to 3%. Only consumer durables and healthcare sectors saw some profit booking, were slightly down. Otherwise, most of the sectors gained during this week. Now let us look at technical charts. This is a daily chart of Nifty index. We can see that Nifty index has gone up sharply from 18,000 levels to almost 21,000 levels. This is a non-stop rally. So I will not be surprised if Nifty consolidates for a few days at this level, but the market is seeing a lot of FII buying interest. So if FII buying continues at this pace, the market, irrespective of the valuation level, still may go higher level or it may consolidate. The chances of corrections at this point of time looks low. This is the chart of Nifty Mid Cap Index. The Nifty Mid Cap Index has also gone up, and the chart structure remains strong. So either Nifty Mid Cap Index may consolidate or it may move to higher levels in the coming weeks. This is a chart of Nifty Small Cap Index. This chart also looks quite strong, making higher tops, higher bottoms. There is no weakness seen on the charts, but a recent sharp run up may see some profit booking in Nifty small cap stocks and consolidation may be there, but chances of big correction is very low at this point of time. This is the chart of Bank Nifty index. So Bank Nifty index has crossed the crucial resistance level of around 46,000 and has moved towards 48,000, and Bank Nifty index is headed towards 50,000 levels in coming week. Now let us look at some of the fundamental factors of why we have seen a big rally in this week. There are several fundamental factors. One is that there was Fed meeting in US, and after the Fed meeting, uh, Mr. Powell, the Fed chairman, has told that Fed has completed with its rising rates, and they are expected to cut rates from the next year onwards. So this has given a lot of confidence to market that inflation is under control in US, and the interest rates are not going to go up further. Because of that, we have seen the market was powered by Mr. Powell's statement. And second interesting thing was the advance tax collections. The advance tax collections were up by more than 19%. So companies will pay advance tax when they are sure that they are going to make that kind of profits. So advance tax collection has given a very good confidence to the market. That is why we have seen the big rally in the market. And third important thing is the growth in industrial production. That is IIP data for November has come at 11.7% growth. So this growth is one of the highest growth in the past several months. So this is indicating that the industrial activity is picking up. So all these factors have contributed for the rally in the market. WPI inflation has come for the month of November. This has slightly gone up. It was at deflation level of minus 0.52 in the month of October. Now it is at 0.62% for the month of November. Though it has gone up, but still the inflation seems to be under control. Retail inflation has slightly inched higher, mainly because of inflation in the food products. So it is at 5.55 for the month of November, has gone up from 4.87% in the month of October. So this is slightly a concern, but still uh, this is within the RBI tolerance band, less than 6%. We have talked about the advance tax collection going up by 19%. This gives the confidence to the markets. The markets, along with other macroeconomic indicators, is always looking for the corporate growth in profits. So companies have deposited higher advance tax comparing to previous year. It has gone up by 19%. So that is why market is very confident that the company's profits and the earnings growth is going to be good. So that is why we see the rally in the market. RBI dollar reserves is at 606.68 billion US dollars. This is a good reserve, comfortable reserve position. One of the good macroeconomic indicators. INR USD rate is 83.04 per dollar. Dollar index is slightly decreasing. The overall demand for dollars globally is coming down. That will give a stability to the Indian rupees. Gold price is at 62,510 for 10,000 for 10 grams, 24 carat. Crude price is at 76.89 dollars per barrel. So lower crude price is good for Indian economy as we are importing large part of our energy requirement. Crude import bill will be lower. That will help us to stabilize the inflation, and also our foreign exchange outflow will be lower. So that will help the economy, and that is why the markets are also happy about it. And we'll see that oil companies prices will move up whenever the crude price is falling. FIIs have been big buyers. They have bought 18,857 crores in 1 week, and DIIs have sold 2,591 crore in this week. So continued FI buying, not only continuous buying, but they are buying in larger quantities. They are putting in more money week by week into the Indian markets. That is why we see that the big rally is supported by FII inflow into the Indian market. All things look good and going well for the markets, but markets are trading in a premium zone. They are factoring high growth in the corporate earnings, and the factor of safety is very low as of now. Any disappointment in any company in the earnings growth will see a sharp correction. So any slippages in result will have a big correction in that stock. So investors should be patient. They should keep longer term horizon, and buying at this level, investors have to be very choosy with the stocks, and they should take SIP routes for investing in mutual funds, avoid putting in lump sum money, and also they should give more time for the investments. The market may continue at premium valuation levels and still go up for several months and even for a few years if the economy expands well and corporate earnings growth is there. So market may trade at premium valuation for uh, a longer period of time. It all depends on the macroeconomic factors and the earnings growth of the companies and GDP growth. At the same time, investors should be ready to invest for longer period of time. And if the markets grow and the economy grows well, it will help the investors to get better returns. And there could be sharp corrections in between. That is why the investors should stay invested for longer period of time, and they should not get panic because of the intermediate corrections. So this is all for this week. We'll meet again next week. If you like my video, please subscribe to my channel. You can share with your friends. You can give your comments. Thank you.